Welcome to the Circle Investor Podcast. If this is your first time listening to the show, we talk about all things Central Indiana real estate, business, and beyond. If it's not your first time listening to the show, then welcome back. On today's episode, we talk about...
I just love networking.
I'm the one having to do quality control. Like I'm coming through and that's wrong.
The old photo and finger point.
Yeah. But I guess before we get just too in the weeds with everything, we should introduce our guest here. Thank you for coming onto the Circle Investor Podcast. Today, our guest is Chase Eckelbarger. I said that right? Nice. Mm-hmm. Yeah, Chase Eckelbarger. I've just realized I've known you, and I haven't said your last name ever
you did
until
great
just
time.
now.
Yep.
But yeah, Chase is a general contractor. He's the owner of Investor Price Services. You also could buy a precious stone from him.
Yes.
So a little bit of a jack of all trades. Got your hands in a few different pots. So so thank you for being on the show.
Likewise. Yeah, I appreciate you having me. Yeah, this is pretty cool. Love the setup.
Thanks for being here, man. Take a minute to explain like what you do and tell us about Investor Price Services.
Yeah.
And go ahead.
Yeah. So, short thing, we're obviously a general contracting company. We mostly work with, of course, we work with agents, homeowners, things like that, investors. Right now, we're working with a lot of out-of-state investors. I think that's kind of our niche right now. We provide the most value that way, right?
Yeah.
When they're in state, they don't need as much project management, things like that. We started, I was a flipper and buying rentals back in the day. I started in 2019 buying rentals, started flipping, doing that whole thing, and learned the beautiful ups and downs of this business, right? Mm-hmm. And so I just love networking. I love meeting people, right? I always tell people, any industry you're in, once you're in it, it's a small world. People know people, whether, if it's not, not directly, there's someone, mutual acquaintances. So that's what I love about business. I love getting to know people. I love just doing the thing, whatever industry that is, getting good at it and just making friends who eventually become peers and colleagues, right?
Yeah.
In the business. So we started, doing the whole flipping thing and then kind of started pivoting. I had a couple other co-owners at the beginning. Do you know the Rickies? Tyler Ricky? Mm-hmm. Shout out to the Ricky boys.
Yeah.
So
I'm trying to get Tyler to come on the show, actually.
Yeah, he's in Thailand.
I was going to say he's out in like Southeast Asia.
Yeah,
so.
Living the life. I'm happy for him. So I met him in 2018, just, DMing on Instagram, became great friends. And then, I love business. I like, creating things. I like, just kind of forming my own path. Right. And, me and Tyler were just kind of pushing ideas around with each other. And we were in the hot tub one day. He's like, let's start a company. And I was like, you know what? I would love that. So let's do it. So, we started doing our thing, leaning on our little circle we've got, from knowing wholesalers, agents, right? Anyone in the business, and just kind of started spreading the word and first and foremost, providing value for people, whether doesn't matter what you are, investor, a homeowner, whatever, we just want to provide value. So, that's one thing I always kind of lead with people is like, hey, even if we don't end up doing this, I'll give you a quote, obviously no pressure on that. Even if we don't end up doing it, how can I provide you value? Whether it's, do you need an inspector? Do you need a hard money lender? Do you need a good agent, right? So I love to just kind of provide value, linking people up with what they need and just, making sure I can help, in any way. That's kind of long story of it. So, now we're about 18 months or I'd say 17 months into Investor Price Services, having a ton of luck or ton of success, and a little bit of luck, right? Mm-hmm. And it's going really well. And I really am getting more and more clarity as it goes on, especially from being a flipper originally. I'm like, this is where I'd like to be, It's one of those things, it's like such an easy business. If you just do what you'll say you're going to do and do it well, right? And have great communication, right? I mean, we're not asking for much these days when you're working with people, right? Do what you say, do it well, and communicate. So, if you can do all of those, in especially real estate, you're going to do well. So we're seeing that. And now, we're just taking it seriously and really looking at the internal, organization and how we can be better and provide better services for our clients, right? And grow as well, So that's why I'm honored to be here. It means a lot. You know, know you guys do a bunch of really great work, and you're obviously very organized, which I admire from someone who's kind of a, figure it out as you go kind of guy. So
good. The facade is holding up.
Oh yeah, it looks great from the outside. I like it, and to the inside. Up in the studio, yeah, you guys are doing well. So yeah, no, I appreciate that I'm even considered to be here with you guys, because I do see you doing a lot of good things and doing it well.
I mean, since we kind of first linked up and had coffee together the first time, I found you to be just like a really great individual to talk to, because you have had this, I always appreciate a multi-perspective kind of viewpoint on the real estate industry. So like having been an investor yourself, and now you run a general contracting business. I always, and not to knock anybody who's like focused on one thing, but so many of the perspectives you hear, most of the time are pretty one-dimensional, or it's like, I'm a realtor, I sell real estate, that's all I do, and that's all I do, and or like I'm a contractor, but I don't really invest myself. I just, I'm happy to just let you pay me to do work on your property. And sometimes those like perspectives, I feel like, get a little
narrow.
Yeah, a little narrow, and then it's like it ends up creating sometimes those collaborations, there's more potential for conflict, because it's harder to understand the perspective on the other side. So actually, that's kind of the question I want to ask you, is like, having been an investor yourself, and now you said like 18 months into owning a contracting business, like what's something that you really learned, like from the contractor perspective of like, oh, I wish more investors kind of understood like this from a contractor's perspective?
Well, I mean, the first thing that comes to mind is our red flags. We'll think about other positive things, but just, understanding even red flags and how contractors work. Everyone knows how they were robbing Peter to pay Paul kind of thing, you know? So now that I'm in the business, I can see how easy that can be, for a contracting company. A lot of people, their whole model is just like, get deposits and I'll get to you when I get to you,
Yeah.
And I literally just took over a job 2 weeks or about a week ago. We quoted it 6 months ago. Guy hired another crew for less. After all the change orders, oh my gosh, he was within like $2,000. I think even $1,000 of our original quote after this guy's change order. Now he's gone. Guy lost $20,000, and we're taking over the project. But to kind of bring that back to is just, and I tell this to people, like, no matter how good of a person they are, like a contractor, right? I've had some that you work for years with, and then they just fall apart, whatever it is, financially, whatever. Even if they're a good person, you got to like understand who you're working with and how they're doing with their business, how they're running their business. Are they just collecting deposits? And so obviously this is easier said than done, right?
Yeah.
Are they just collecting deposits, getting to the next one, and then you're in line or what, whatever like that. So I just know that you just gotta just keep that into account, when you're working with contractors. Like they could be good today, but not good tomorrow. So you need to be keeping an eye on, like, how are they doing financially, things like that. Like you'll know, right, working with people if they're stressed out, things like that. But just kind of, that's one thing I've learned, and so one thing we do to eliminate that is we have separate bank accounts for deposits and things like that, and then payroll, and then profit margins, and then taxes. We have a different account for all that, so it's not commingled, right? Because then you're just doing all this backup bookkeeping, trying to make sure your cash flow, you're monitoring cash flow in one account with all these different things going on.
It's a lot.
It's a mess. It's a mess. So that's why we're trying to bring some of that professional acumen to the structure of how we're working, right? So we can avoid those things, because you can see it's an easy thing to get into. I was doing my cash flow analysis this morning, and I got money coming in at the end of the week. I got some next week, but it's, it can get a little thin, and you got to make sure you're doing the right things. And of course, then you got to make sure you're paying people on time. So it's kind of a long roundabout, answer to your question. But
I think that's a great one to highlight. It's something I think we've experienced plenty of times on the, sort of the client side of it, of contractors, like you said, contractors we've worked with for years who are great for years. And then all of a sudden it's just, hey, what happened? Like we just lost you on this job. And I think that is an important distinction. And that like matches my experience. I've built personal relationships with many contractors that unfortunately it's like we don't work with today. And it's because, something something kind of ended up happening. And I still to this day, even though it's like from a business standpoint, had to like kind of sever ties. It was still like, I don't think that guy is like a bad guy. I think he's just disorganized.
Yeah.
Like he just, and that makes that robbing Peter to pay Paul, keeping your accounting like siloed from like one project to another. So many contractors that are talented at what they do in terms of like the renovation and the actual skill set involved in it. They're not accountants. Like they didn't want to be. That's not why they got into the business. Like
they're swinging hammers.
Yeah, they want to swing hammers, and that accounting side of it. Like, so I feel like it is the ruin of a lot of contractors, where you just end up in that situation where I call it like you're inadvertently running a Ponzi scheme. Like,
yeah, it can happen. It can happen. Yeah, and I've just that was a realization I had within the last week. Like we had the stuff siloed out beforehand because we had a business coach who told us to, right? And that's what, gave us a good heads up on things like that. But I saw it firsthand. And I was reflecting on it. I was like, oh, I see now why people do that, and especially after I took over that job for them. But so that's been one thing I've learned. What was the exact question exactly?
Well, yeah, learning from the thing that you wished more investors understood, and I think that is a big one.
I appreciate it. Yeah,
it's also going to allow you to scale as you grow, and allow you to kind of fulfill your ambition too. Because, like to Ryan's point, like there have been so many great contractors that we've known who just couldn't build these processes and habits now when they're young, and so like as their business started to grow, it got too much to control.
Yeah, or sometimes like I'll see it where people will have sort of a sense that they're overextended, but they don't really have the systems to like know for sure. So they'll end up just turning down jobs, and like so they're just kind of like,
or price is so high that if they say
that's the what is that joke with contractors never say no, they just raise the price of the quote.
You're looking at it, you're like, what the heck?
Yeah.
But that's and one thing you kind of led on to earlier was when we were talking about kind of like individual people, like whether it's just an agent or I'm just a contractor. That's one of the things that I really like about our business is like I always say is like I can look eye level with these people, especially investors. Like I know what it's like. I know what they're looking for. Usually just the price, right? Obviously in quality, but it just makes the conversation easier when we can just cut to the brass tacks of everything. What's the purchase price on this? Okay, what rehab are you trying to be in? And what's the ARV? I ask all those questions. I want to see what's going on too, especially if you're bidding out a job and you got to know, if the number's even going to work and it's worth filling out a whole quote for. So it's just nice getting in there on the mix. Okay, what do you need? Do you have your inspector? You got a good agent, right? So I do enjoy that because, like I said, I feel like I can be more eye level. It's not like they're looking down on me because I'm a contractor, right? And I'm not looking down on them because they're maybe new at something. So I just think it's a little bit more of a level playing field for us.
Do you ever get anybody who's kind of resistant, like they're trying to like keep their cards close to their chest on like the ARV question? They're like, oh, just give me your price.
It's not been too bad. No, I think you got to build rapport and stuff like that, of course, But no, I haven't got too much pushback on that because I like to think we all bring in that we're trying to make something happen energy, Yeah. So luckily not yet, but I'm sure there will be plenty of people, that want to. They're just suspicious of me,
Yeah, and a certain amount of that, like because I get it, like as an agent and a property manager, like we experience that sort of same level where we have to build this trust and know that like, okay, we are partnering, and like we're all trying to achieve the same goal here. So I kind of understand the certain level of sort of skepticism and like I'm going to keep all the strategy on my side and I just need you for XYZ.
Yeah,
but it's like I feel like I run into a lot of out-of-state investors that they kind of speak out of both sides of their mouth in that because like they'll, on the one hand, it's like they want to keep all their strategy cards like close to their chest and like not sort of be open-handed with that. But on the other hand, it's like, oh, I'm trying to build my team. I want you to be my guy. Like like we have this like one-to-one relationship. It was like, well, if I can't see what you're doing behind your back, then I can't. Yeah. I can't really be the resource you want me to be.
You got to all have the same vision here. You can't leave anything out, just part of it. Yeah, that makes sense. I didn't know you got that sometimes. It's funny. I'm sure I'll get someone now that you mentioned it. I'll be like, oh, that's what he's talking about.
Yeah, more so on I'd say the property management side than on agent. Like people want to talk strategy with you when it comes to like their their property search. It's funny how like I think people like tend to see agents in that role, but with property managers, I think people view, at least it's been my experience, a lot of people view it as like you're just here to provide a service. Even though I'd say, if anything, it's the opposite. Is like your agent is there to provide you with a service and just finding the property, find something that meets your criteria, and then they're kind of done at closing. Your property manager, that's your long-term partner. That's your boots on the ground for
asset management, you know?
Yeah, exactly.
Yeah, that's interesting.
It ties in well with like your first point about like one of my favorite quotes that I think came from a business coach, but like I heard it in business school, was that being in business is just an excuse to be in relationships with people. And so like that trust building, it starts from day one, like that from that first conversation. And I think a lot of times the reason that people who are hiring a property manager have those issues is because they've had negative experiences in the past. And it's just, then it's on us a little bit to overcome those trust issues and show them that we're fully committed and we have the accounting dialed in, we have like the boots on the ground factor all dialed in, and we can put it all together. Yeah,
that's I was dealing with it with my 4-unit in Muncie. It's just been, things were great with the property manager I had until it wasn't, obviously. So now we've got someone in now, but we have one vacancy we've had for like 6 months, so we're trying to get it filled. But also it's like, they're like, yeah, we manage 400 doors. And I'm like, okay, how's my 4-unit going to make it to your priority list? So I can see, that's, just a battle of the business,
Yeah. No, I feel like there's so much gaslighting that goes on in this business where it's like, we manage 400 doors. Like if that's sort of getting brought up in a conversation when a problem is being, it's almost like it's a defensive thing. It's like, it's like, oh no, we do a great job. Like, we're not just letting you down. We're letting on 400 people. No, but
yeah, it's all making sense now.
But I think that's interesting. It's interesting because we manage around 400, and then I'm just thinking like of time, like I'm just, I find that in those situations, like if you have a stagnant listing, it's like this is where that partnership element comes in, where it's like we have to be. We have 5 ops managers on our team, and Stuart and I both really try to instill in all of them you need to be brutally honest with your clients. Like that is providing this service. Like if the property's not leasing because there's like a chunk of flooring missing right when you walk in, like the client needs to know that. You need to be telling the client that every day until it's fixed. Or if our price is just every person we're showing the property is like, oh, I'm going to lease the property down the road because of XYZ reason, or like that it's just a better deal for me. Like everything comes down to communication. When it comes to leasing, it's like there might be some just simple things that need to be changed. And, and that's the thing, because if I'm a client in that situation, which I do have rental properties that Intrigue manages, and my first assumption, if my property manager is not communicating to me, hey, I need to either adjust the price or I need to, adjust something about the level of finish or make a repair. My assumption is they're just not doing their job. Like you're not syndicating the lease. You took bad photos. You don't have a good listing, something. You're not following up on inquiries. So I always just try to teach our ops managers, like, that's what the client's assuming about you, unless you are telling them what obstacle you're running into that's related to the property.
Yeah. And it's a two-way street. Like they need to be inquiring with the project manager or property managers as well. You ghost them for a month, you got to keep that. I always call it cadence, just keep that cadence.
Yeah.
So then you're, if it's biweekly, weekly, monthly, just keeping that cadence as the investor, right? Property managers, they got a lot going on, you know what I mean? And most of them, it sounds like you guys do a good job with it, but things happen. You just take, it's on the client too, to make sure they're using, asset managing, with their property manager. But the honesty thing and the communication, I feel like that's a crux of people in business, right?
Many businesses, yeah.
Like, Matt Wayner, shout out to him. He told me, the old adage, fast to tell bad news, slow to tell good news. you know? So I try to always live by that. As soon as that problem comes up and you find out about it, I had the client order 30-inch vanities and it was supposed to be 26. But guess what? I told him it was supposed to be a 30-inch. So I had to own that, right? So as soon as you find out, you know, you're on the phone with them, and more often than not, sure, they might get upset, but a lot of people are just appreciate the promptness and just getting to it. Let's get on this call and let's hash this out right now. You know what? I'm going to go hand deliver those vanities back to Home Depot for you because I did that. I'm going to go get those returned for you. You know, so just compromising and communicating. So
coming up, you that's the thing. Yeah, once everything's out in the open, you can. You know, you can work out a solution together and you're faster to find it. In a past life, I worked for Jimmy John's Corporation. I audited their restaurants, and you know how Jimmy John's, like, I don't know if I think they still do. They have the signs like everywhere.
I think so.
They used to have the sign, and there was always one that I always remembered noticing. Some of them actually had like nice little business adages, and one was always like, telling the truth is not just the right thing to do, it's also very efficient. And I like it's similar to that fast to tell bad news. Like that's always stuck with me. It's like, yeah, if everybody's just honest, then we can nip this in the bud right now.
Yeah. So we're all solution driven here. You know, sometimes I got to remind people on the call, hey, this call is a solution driven call. You know, that's all we're here for. We're not here to complain or anything. Let's just get to it. Let's fix this, you know? And if you have to own something, you own it, you know? And then of course, you know how it goes. You're building trust and things get better along the way. Problems always happen, you know? It's up to us to bring them to light and solve them, you know? And if you do that in any business, you're going to get pretty far.
Yeah. So, it's totally true.
Integrity, you know, gotta have a little bit of integrity.
Right. It's also the right thing to do.
Yeah.
What do you do when people aren't looking? Yeah.
Your client's always going to be a lot less upset too because like delaying telling them something like a mistake that might have happened is just going to delay the project because you're putting off shipping times of ordering a new vanity or something like that. If you're quick to tell them and correct the issue, then you're also keeping the project on track too.
Yeah. I'm pretty happy these days, by the way. I have been hitting my timelines on projects. I mean,
great.
I'm sure you guys know, like for flipping, I was telling my client the other day, he was mad at me because I was a day over on my contract. And I mean, I had like a little storage unit, floor to paint, and then the pitch on the water heater exhaust was wrong. You know, 2 items. And I was like, you know, I'm still pretty happy with this. It was a good job. And we did a full basement remodel, you know, and all of the upstairs. And I just thought it was funny. I told the guys, because they haven't worked with anyone else, you know, before. And so it was one of those things where I was like, I don't know if you know how good you've got it working with me, but I'm honest. I take it. And if you want to yell at me, I will sit there and take it, you know, and say, yes, sir, you know, I will do better, you know, let me know how I can do better. So, but right now, you know, things are going pretty darn good, you know, hitting timelines. If I can live with a day off my timeline, you know, on a 6-week project, I think that's pretty good. We've all had the pain of, you know, months over. I've had some long projects.
Sometimes I feel like that can be client dependent, right? If they're, you know, if you were only given the opportunity to quote 80% of what needed to be done in the beginning, and then, you know, they sort of realize as the project's going on, like they keep adding change orders. It's harder to add.
Change orders add timeline too. You know?
They add timeline.
It's not just cost.
Even though we don't do project management specifically in the property management world and like working with investors, we usually have a front row seat to it. So we're usually kind of a spectator. So like, okay. And sometimes we're playing, you know, like not on with any of your jobs, but like, you know, sometimes I feel like we get to play peacemaker with the contractor and
be the mediator.
I had an uncle growing up that was a contractor. Like, you know, he ran like a small operation for a while in Central California, and he always said the phrase like, you know, when I quote a job, I don't quote what you know, it's like I don't quote what it takes to start the job. I quote based on what it's going to cost me to leave the job. And it was like I thought that was kind of a good, because it's like you're just trying to anticipate like. What's the client going to say that's going to just keep me stuck on this job?
I got one buddy who's I've been working with. He's got a pretty good company, And he's like, I have a $250 change order form. He's like, so because you can kind of get into that sometimes where people just changing, and it takes, it's just adding more work, obviously change orders sometimes are necessary, but they can kind of get off to the rails. And so he's like, man, I would totally add a $250 change order. It makes them think twice before they start doing it,
Yeah. And think when they're doing the original quote, if you're telling them that up front, then it's like, hey, if you think you're going to be adding a bunch of change orders, maybe think about that now.
Yeah, exactly.
And just get it on my original scope.
Yeah.
Or if you have to do a change order, like maybe if you think you might think of 5 more things, try to think about those right now. Get it and only pay that $250 once.
Yeah. And that's why, that's a good point. And that's why we always have obviously a contingency plan. I was doing one today. We had two different plans on the property. It was on Station Street, I believe. And, one was like a high-end flip, maybe 125K rehab. Other one was like 80, and we told them, I was like, hey, we're pretty sure we got most of this. We're looking down the road, obviously can't anticipate anything, but you always got to bring up the contingencies. Hey, keep in mind on the smaller budget, 7 to 10K flex, on the bigger one, 10 to 13K, for a contingency. Just always keep that in mind, because just because we have our quote here that has this, say, 80,000 rehab, is that 10K potential going to really make or break, or are you going to be able to, sleep at night, knowing that you might have to use up some of that, all of it, or none of it?
Yeah.
So just having that conversation up front, and it's also just protects everybody, Yeah. Your deals cannot, especially flipping too, sometimes you got everything whittled down as much as you can, and you're like, man, if anything goes wrong and it's like 10K, which happens very easily, and even if it's a concessions. You don't anticipate that when you're flipping, unless you do. Now we anticipate concessions and underwrite for it, but just things like that. So like I tell the people, hey, if that 80K is 80 and it's done, anything over you're gonna be stressing out, it's probably not something you want to consider,
Yeah.
So, but if you're comfortable with it, with the contingency, hopefully we don't have to use it, At least we have that conversation, ahead of time, so we can avoid any pain for anyone.
Yeah. Oh, absolutely. I think it's great to set those expectations. It's almost like it's one of those things you hope people just sort of come in understanding that the nature of this business is I'm going to give you a quote, but it's based on everything I can see. If you're going to have me like opening up walls and doing additions, like
right. Don't know what we're going to find.
Like, there could be contingencies. When you say concessions, you mean like when they go to sell the asset and they make concessions for,
Yeah. I've had concessions on like the last 3 of mine.
Yeah.
I mean, they were spanning the last 12 months, but still. Are you still giving concessions? Like, I thought we were at like the highest rate of them.
Do you just mean in like general?
Like when you're going to sell and we're going to give them like I thought it was called a concession, like a credit,
Yeah. Well, usually it's like it's tied to something specific. So you can give, to me, if you're having to pull out a lot of concessions, it can mean that you just did your ARV analysis, like you had an issue on the ARV analysis. Like because when I'm doing an ARV analysis, I'm looking at specific comps and saying like, I have to match the level of finish of this. And they're selling for this. And they're actually on the MLS, if concessions were involved in that price, it'll say like listing agents or, when the property sells and closes, they're supposed to enter any concession amount so that we can compare apples to apples and know, okay, they sold for $270, but they had $10K in concessions.
Okay.
So it's really $260. So part of that's like, I think just your agent has to do a good job, like running that CMA on the ARV analysis. But, but concessions can happen also during the inspection. Like, you end up, it's like, oh, there's this issue in the foundation we didn't address, and that's going to cost $5K to take care of. Like, sometimes they're like a seller will offer a credit for that. But I think what you're talking about is sort of that more upfront with the offer. Like, I want new flooring on the second level, and so I'm going to get a $8,000 concession from the seller.
Yeah, and I think something also with the loans too. Is there something with the loans where like, we might have like been maybe a little high. I mean, we try to price our properties, when we're selling them, fairly obviously. But I'm trying to remember exactly what it was. I can't imagine. I remember my last one. It wasn't something where like the house wasn't done.
Yeah.
I forget why we did, but it was like $3,000 we gave in concession. I feel like they were maybe at their limit or something like that.
Sometimes like I'll see it a lot on, I just actually had a closing today that was a FHA buyer. FHA, you only have to put 3.5% down.
Right.
But sometimes people that utilize FHA, like they don't even have that. They have like, I would like to buy a house, but I have zero money.
Right.
Like that's like everything, goes to pay bills, and you can buy a house. Because the FHA allows you to get seller concessions.
I think that's what our situation was.
Yeah.
But
what I would say in that situation, if I get an offer from FHA, loan, if I also have an offer from a conventional, I'm going with the conventional.
Yeah.
So it's like, because it's just strong, you're going to jump through less hoops. Than going with FHA. And if I'm working with a buyer that wants to use FHA, I always set that expectation. Like we got to make our offer as impressive as we can because
there's a lot of red tape.
Because it's an FHA and the seller's going to have to deal with that. But what'll happen and like this happened to be, I was representing the seller in this case. It was $122,000 property, Little Flower, small little 2-bedroom.
Yeah. We got a project that just started in Little Flower on Linwood.
So this one was on Chester. But yeah, we just so we go under contract, so the FHA, that was the only offer we had in hand at the time. I think we'd been on market like a couple weeks. And so, we negotiated, we landed on a price. The concession thing, I think they did, I want to say they asked for, maybe like $5,000 in concessions. But what will often happen is you can increase the purchase price to compensate.
Yes, I think I have done that before. Okay.
Yeah. So usually like that's where it sort of, for the seller, it becomes a wash. Like for the buyer, they want to get the maximum they can get for concessions, the maximum FHA will allow.
And the concessions can go towards like the closing costs, right? And things
closing
like that.
costs, down payment.
Right, that's what I thought. Yeah.
Yeah. The guy who helps us produce this show, his ears might be burning over there because he's works on the lending side. So I'm sure he actually probably knows a lot more about. He doesn't have a mic though, so I get to spread misinformation about it.
But yeah, but the point was, obviously, just when you're doing numbers with people, we always got to have contingencies, flex plans, things like that. Make sure you're not getting in a bind. So I think that's up to the contractor to make sure is vocalized, they could be new, to any of it, so just trying to make sure we're buffering and protecting people.
Well, it all just comes down to making sure you have that healthy margin.
Yeah.
Like, because if you're trying to flip and you've got a 10, 12% margin, it's like, then stop trying to flip. That's a buy and hold. like great, you added some value, but like, let's hopefully it cash flows because you should rent that out,
Yeah. I've been in those situations before. They're like, can't you rent it out? I'm like, no, I have a bunch of hard money on it. I need this thing gone. Yeah.
Well, but if you're done on the rent, now you can refi.
Yeah.
At a 7% interest rate, which is, but now, no, they're coming down. They're like 6. More around 6 now.
Yeah.
Yeah. Are they going to go down? Isn't it, it's based on the treasury yield, right? And sometimes that goes up.
I don't know. It's been working its way down. It made it under 6 recently, but I've also been hearing things like people expect in 2026 that it may start to increase again.
Really?
It is all just based on, it's like the bond market.
Yeah, treasury and things like that.
I think it got as low as it's going to get.
Really?
Foreseeable. Yeah, okay. I mean, I can't speak.
Well, of course, everyone's just predicting.
Yeah. But I think like our previous guest said something about like we're never going to see 2-3% ever again.
That was crazy.
Yeah.
That's when I started flipping, was in that market, the 2019-2020 market. My first house I ever flipped was up in Frankfurt. My wife's cousin, David Meek, great guy. He owns Restoration One up there. He's an investor. And my floors were like 2 inches off from one side of the house to the other. And I sold to a VA loan.
Yeah,
it passed, and I had multiple offers, accepted over asking, things like that. So that was when I started. It was a much more forgiving market.
Yeah.
So I could have floors that were a little wonky. The house was great, but I did have that.
People were just glad to be able to get into a house because the inventory was so crazy low.
I know,
because everybody could get those mortgages, and it was like practically free money out there.
I thought I was like getting ripped off paying like, I think it was like 4%. I think I paid on my rentals back then. You know, I was like, man, this is a rip off.
Yeah. Now that would be a dream.
Yeah.
That would be a dream.
Yeah.
Yeah.
It's interesting the different strategies after the purchase. Like I've talked to Ryan about like my personal house, right? Like we bought in 2019, a stupid low interest rate, and then everything around us, all the comps jumped up to like 150 to 200 above what we paid for our house. And some people are like sell and move, and Ryan's like, no, do a HELOC loan right now and buy a rental property or something.
Yeah.
Never sell.
Never sell. Yeah.
I'm a realtor. I shouldn't say that. Like,
Yeah.
if you do sell, list with me, but
Yeah,
also
there you go.
never sell.
Right.
Yeah.
Well, one of the questions on our list, like for you, was what is something that out-of-state investors or just like people who aren't local to Indianapolis should know about the Indianapolis real estate? Whether it's flipping, I know you have a background in that. Whether it's hiring a contractor, buying properties.
A lot of potential here, as you know, obviously everyone knows, but I mean, it's just pretty competitive. You know, it's pretty darn competitive out here. Expect to put out a lot of offers. Obviously it's important who you're working with. It's just so easy to have people run off on you. We've all had it done. They've lost a lot of money to bad people. But I mean, I just had a client that was from out of country that I met 2 days ago, and they were kind of getting their lay of the land, things like that. So I was giving them resources, telling them to go places. I told them to go to the One America building up in the Skyline Lounge.
Oh,
I was like,
nice.
go up there and get a look at that city,
Yeah.
But yeah, it's just, I mean,
a great one.
I do you guys agree? I mean, do you still think there's a disconnect from seller prices and buyers' expectations? Do you think that gap is going to close it all? Because Tyler Rickey, love him. He crushes it and puts houses on contract, but I'm sitting here sometimes looking at 20-something houses, putting out 20 offers, and, it's tough to get. And it's always that margin that you need for your flip to work. That's the deal breaker, right? Mm-hmm.
Well, I think when sellers put like a distressed property on the market, they're almost willing to discount it to the point where it's like if somebody bought this property and they maybe DIY'd renovations or even hired contractors to do all the renovations, they wouldn't be upside down. But they also wouldn't make any money. Like they're not gonna. So I think that would be consistent with your point that it's that margin that you need to make a flip worth all of the effort that is often missing at whatever that distressed property purchase price is. What you said is like that disconnect between seller pricing and buyer pricing. I think of it less as a disconnect between seller pricing and buyer pricing, and more of a disconnect between buyers, like disconnect between like one buyer's pricing and another buyer's pricing. Because like I mentioned that example of like the owner occupant who's like, there's still plenty of people and inventory is still low enough where it's just like, I just want to find a house I can afford. Yeah. And so they're just like, if they find a house that they can afford, even if it needs some work, it's like, all right, let's do it.
I agree. That's a great thing for them. Yeah. I think the disconnected buyers would be flippers and investors potentially.
Or flippers and owner occupants or flippers and buy and hold investors. Like, so even the different types of investors, because that's I think maybe the biggest driver of the pricing that's happening on distressed assets right now is you've got out-of-state investors that they don't plan to flip it. So they're doing their underwriting completely differently. They're just like, okay, I could get this asset. I can maybe I add some value. I do some renovation. I rent it out. I cash flow. Beautiful. Let's move on to the next one. Yeah. And they don't care about leaving money.
And they might get a little extra equity while they're at it.
Exactly. They view that as whipped cream on top of the sundae.
I agree. Yeah.
So that kind of, it puts flippers out of business a little bit, because then flippers are like, well, then if they're willing to pay $100K for that property, then the seller's not going to take my offer for 80.
Yeah. And back to your point about, what to know about the city, obviously highly competitive, but like what a great place to be, right? Like all the markets we're in, I'm born and raised here in Indianapolis. Like this is pretty cool. So there's a ton of obviously opportunity. Just, you got to sharpen your teeth and get in there and get messy and always, network and get to know people, and don't just take someone's, recommendation for someone. I had that. Like one of the guys that took a lot of money from me, he was referred to me from a big multifamily developer. And he was like, yeah, he did great for me, did a great job. And then he just robbed me blind. right after. So it's like, but what I do, I only took one reference, you know? So it's like your due diligence is just so important. You know, it might sound, obvious, to us now.
Yeah.
But, when people are excited, they want to run and gun with things, you just got to take your time. I think that's,
was that like, you said that was like a sub that you worked with, or like
it was when I was flipping, I hired him. Yeah.
Hired him as a contractor. Yeah. Yeah. And I think what we do with contractors is we like to try to start them small. That's our biggest thing. Is like I like to send people on the leaking sink repairs and like some of those, and it doesn't matter who, like even if they come like well recommended, and I'm like, okay, it's like, well, like I just got to get a feel for how you operate.
Of course, I've made the mistake. I had one of my, this is part of what we bring to the company. When things go bad, I'm gonna eat the shit sandwich. You know what I mean? So we had one guy, who was recommended. He'd been doing some other stuff, so I put him on this full Carmel, Indiana flip, rehab.
Yeah.
And the first red flag, man, the client said, I want gray roof. Okay, gray roof. So he showed me the tile sample, the shingle sample. And there's gray there. But he didn't realize is when I see a photo of the shingles on the roof the next day, there was 3 colors and mostly green was involved. So there was like dark green, light green, gray. So
were the shingles all different, or you're talking about like the asphalt within the shingles?
The shingles, like you got the shingle piece. It was like green, gray, light green, dark green, gray. It didn't look too bad when it was on the roof, but obviously it was not the gray that we said.
Yeah.
So I had to.
So he showed you the one gray like little piece of the shingle.
He was like, well, it was on a pallet, and the photo, I looked at it, and you didn't really realize it was all covered up.
Oh yeah, because he just peeled it up just to show you.
Yeah. So, but that was just I put this guy in a full house project, and had never personally worked with him, and they put the wrong color roof on, and then of course I got my magnifying glass out. Investor has her magnifying glass out. And she's like, look at that ridge line over there. And it's like sagging down. And then we go inside. I'm looking at the plumbing. I'm like, what is going on in here? And then my other contractor, because I'm like, I need someone else over here to like take. He goes, we're in the driveway game planning this. And we're like, okay, we're going to go in, just act like you're a friend. You know how it goes. And the guy pulls in. He goes, oh, you've got so-and-so here? I was like, you know him? He's like, oh yeah, he's trouble. I was like, no. It could all be avoided if I just hired this guy for something smaller and checked his work, because I would have seen the crap, quality that he was providing. I ate that whole roof, and I ate all those plumbing repairs. It was like $15,000.
Yeah,
I think tough. I broke even damn near on that project. God bless, you know. So, but you know what I did? I stuck with that client. You know what I mean? I stuck with it and made it through, because you know how it is. Like any other guy, a lot of, not all, of course, but a lot of contractors, you start pinching them.
And because we've dealt with it with a few different contractors that we've actually done a lot of work with, and it's like I've been saying, like almost on repeat the last several weeks, it feels like the difference with a contractor is not are they going to deal with like labor shortages, like running low on staff, like having issues with quality on that. Like it's not every contractor is going to deal with that. That's just part of it. You're always going to deal with like kind of problem people coming on crews. It's always how does the project manager, like the owner, deal with it? That's the difference maker. Is like, are they going to make it right? It's like, it is very much like an all's well that ends well kind of business. Like if we make it to the finish line and we got the product that we were trying to pay for at the beginning,
the first time,
then everybody's happy. But it's like I've dealt with a contractor recently that was like it was like they're doing all these renovations and I'm the one having to do quality control. Like I'm coming through and just like, that's wrong. Like that's wrong. Like
the old photo and finger point.
Yeah. Just being like, okay, so this is not how you install like shoe molding. Like this, like see, these pieces are not supposed to be meeting like this. Like, just like, and it's like, it's not even that happened. Like, but it's just like, why am I the one who's having to catch it like 1 or 2 days later? Like instead of project manager going behind like, nope, like that needs to be.
So rule number 1, put them always on small jobs first, testing these people. And it's the fun part of hiring, right? Dealing with different personalities. I've got some guys I used to work with that good work, but they just had the worst attitudes, So especially if you're going into other people's homes, like it's one thing when you're rehabbing a vacant house or doing anything to a vacant house, but it's another thing if there's a renter there or even the owner, And I've seen people and I'm like, oh, this makes sense why you haven't grown a bigger company, because you got an attitude problem.
Right.
So it's just,
gotta have a little
it wasn't
manner.
quality of work or anything like that. He showed up on time, but he's just, rough to be around. Yeah. So, but yeah, so always, do due diligence and, start them off small. You'll protect yourself that way.
Yeah, your story of the wrong color roof. You reminded me of that. I don't know if you've seen that. Like it's like a sound on social media where it's like, how much you pay for the new guy,
Mr. George.
Mr. George, how much you pay for the new guy? Like it's too much. It's too much.
Yeah, that's a real thing. That's a real thing. Yeah, so it's a joy, but no, we're trying to foresee all those things and correct that, and bring the professional structure that needs to be there for a company like this. Yeah. So just one job at a time, one client at a time, doing the best we can. We always have post job reviews, things like that, and see what did we do wrong here. Whether it's just the controlling of the money or how are you organized. Like one thing, like do you use Asana?
Yeah,
I love Asana.
Yeah, we do.
I just started using it like months ago. Just things like that. I use it for tracking my projects.
I was gonna say,
you use it for just like lead follow up.
Yeah, we completely misuse it, to be honest. We don't really
I'm misusing it actually. Yeah,
like
it's
great. We don't use it for its full capabilities, because I know you could do things in that, like you could create project dependencies and like create like kind of this whole Gantt chart kind of thing. Yeah. We don't really do any of that. All we do is we work with like virtual assistants, like our operations coordinator, my transaction coordinator, like they work remotely, and to train them, like I will basically just get on a Google Meet call with them, do a whole training session where we share our screen and we record it, and then I save that recording as like to a Google Drive folder.
Yep.
And then so what I do is I have weekly, monthly, daily, and as needed tasks. Those are all listed out in Asana. And so I give them a title and then with a link to the video, to the training video. So it's like they could kind of come in every day and they just like know what their day.
That's cool. I like that. I like that you got training videos on there. That's cool.
Yeah. But it's more of like a static, like almost just like we use it as an organizer.
That's what I use it for too. Because like I used to do just Slack, right? Slack is for communication, not tracking, or anything like that. But I love Asana, and I've got a same thing. We brought on a virtual assistant that's just like a junior project manager. So because I have client calls every Friday, and we review the week that happened and then discuss the upcoming week. And I provide notes for all those calls. So I have my junior project manager take Tuesday and Thursday morning calls. Sometimes it'll be a Friday morning with the contractors, and he'll review, because we got our phases. Say like tomorrow we've got our phase 2 completing at a Warman project. And so we can go line by line. Okay, what about this? Okay, and I'll have my contractors send them the photo right there on the spot, put it there. You can mark it complete if not. And then at the end of it, I've got nice notes to review, things like that. So when I have my client meetings, I've come prepared with, updates and things like that. Yeah. Which I like a lot. So just obviously like utilizing all the technology we can these days is just so powerful, and eliminate us from doing, stuff that is monotonous, and repetitive.
Yeah. Allow you to reallocate your time to more important things.
Yeah, 100%. Which is, I wish I had it on me. I usually have it. Plod AI. It is my favorite thing to do right now. I'll send you the link for it.
Yeah, I've heard of Claude.
But man, all it is it's just a recording device on the back of your phone.
Yeah.
Have you heard of that one? It's all it is. That's all it is, but it just has its own little AI engine for it. So anytime I take a call, you have to be on speaker for it, right? If you're on earbuds, it won't work. But man, anytime I have a call of substance with anyone, I'm recording it. You just hit transcribe, and there's like a different adaptive AIs, one that'll like troubleshoot and figure out answers for you, and one that'll just like record everything. But man, like anytime you have a call of substance, I'm sending those meeting notes, and it just changes the tone, You know, like you just look way more professional. And then I take all of my Plod recordings. I got like 200 on my phone right now. Take all those and I put them in a master AI file for my company. So then I can ask the AI questions about things. So we haven't got like completely to that yet. We've got them all in the folder. But, you know, my business partner, Jacob, in our flipping, he has a marketing agency, and he had a client wanting to cancel, and he basically pulled up 10 months, 12 months of transcriptions, put them in AI, ended up saving himself like 10 grand, you know, because they wanted to cancel. And he's like, look, I have all the notes here of when I requested something and you didn't deliver, you know, and and here's all our reporting. So just like little things like that can really literally save you money.
Oh yeah. That's like a huge, being fastidious when it comes to those communications. Like there's, in any of these partnerships, you're creating so many little micro verbal contracts, and like,
it's so easy to get lost.
Yeah, and if a relationship ever disintegrates, then it's like, okay, well, now we're looking back through our email, like what was agreed to, and
what went wrong. You know, that's a big one. Is just like miscommunications, right? Like so many times you said don't do that. I said do that, you know, and it was verbal and it wasn't in text. And so now, thank God, I've got my recordings. So I'm like going through listening to it. I'm like, oh, there it is. Send it to him.
Well, especially in a business like contracting or real estate or property management, there's so many times when things go offline. Like you do your best, like with the assets that you have, to keep everything centralized and keep like the best record you possibly can. And there's so many times when it's like, let's just hop on a call and discuss this. And so I think that's
it's powerful. I'll send you the link for it. I've had like 8 friends get them and love it. So
we might
highly recommend Plod. Plod AI.
Yeah.
It's been great. But so just trying to utilize technology, keep our heads above water, and deliver great products to people and services. So it's been a fun ride.
Yeah, sounds like you're doing it. Sounds like you're creating a lot of value out there.
Yeah, no, I appreciate you guys having me here. Yeah, it's nice to get to know you guys a little bit better. Got to put the name to the face. I got to meet Richard.
Yeah,
right.
Yeah, I know. You're doing some quotes for him.
Yeah, we got a furnace job we were doing for him. Yeah, and Kenwood downtown. Yeah, we did a HVAC replacement, and that's one thing. You know, just side note about my company. One thing I'm working on continuously is I have the most clear value on bigger projects, you know, but when it comes to like handyman stuff, sometimes I'm not as competitive price wise. Yeah. You know, but that's one thing I'm working on, and how can I solve this? And of course, like very often, like we do inspection reports a lot for agents. That's sometimes, you know, they're actually a little more cumbersome than you'd want, you know. Yeah. And it's not like you're getting rich on them, but we do that as a service because we want to, you know, be able to show agents, hey, like this is what it's like to work with a great construction company. Yeah. You know, so we do the inspection reports, and but to my point was just I'm working on becoming more competitive, you know, on the smaller projects, you know. So if you need an outlet switched out, I'm probably not your guy, you know, but if you need HVAC, a roof, you know, or a full home remodel, like I'm definitely your guy. I'm saving you money on those.
100%. Yeah. And I mean, the way you're set up it sounds like you're, you know, anyone who is as organized as you are, like that is where you're going to be able to provide the most value. And that's a big internal discussion we're sort of having at Intrigue, is like we're working on this sort of cataloging system of like, okay, these are our handyman contractors. They don't go on big jobs, but they can add value because, like, you know, they'll go swap a light, you know, an outlet for $50, like, you know. So there's a place for, you know, handyman in the business, and then there's a place for definitely a big need for organized full scale general contracting companies.
And that's where we shine. I love you know, I love building out the phases and tracking it on Asana now, you know, and hitting that complete button, you know, and making things happen, and just rolling with the punches. Oh,
I wanted to throw one more thing before we wrap up. I was going to give you a piece of from we were talking about the different perspectives, like from the agent perspective on those inspection response.
Yes.
Because I've been like, in fact, I've got you on my list on our website of like people I recommend for things like inspection response, and for or just providing a quote if somebody wants to do a value add. But something I've really appreciated when contractors do, when I have, as an agent, when I have an inspection response, we get the inspection report back. I've kind of requested this, and I've had a few contractors be like, yeah, well, we can do this for you. And it just makes my life a lot easier, and it adds a lot of value to the client, where I'll say, like, here's the inspection report. Here are the major items. Can you give me just a rough estimate without having to walk the property? Like, give me a rough estimate that is like, based on just, I know I can do it for this. So aim high, right? And then you generate that estimate, and that, if anything, that helps the buyer, because they're just going to use that for their negotiation.
Right.
And then of course it kind of goes back to that: be fast to deliver bad news, slow to deliver good news. Because then if we set that expectation, like if I come in and measurements reveal that I could do this a little bit cheaper, I can give you like a little, like, you could save some money. But at that point, that the main thing that the buyer's trying to get is, like, I just need an estimate that I could use to negotiate with the seller.
Yeah, and we can do that.
And then you save time on
I did that 2 days, or that was yesterday, with those investors that were from out of country. They were looking at a project that was a little bit hefty, and that's why. And I recorded it on Plod, the whole thing, and so we talked about it. And so I sent them the notes, and they have now negotiation, especially when you're doing a buyer inspection report or whatever, or seller, and you're looking at those line items and you're explaining, well, this is what you have to be doing. That chimney cap is a custom size. It might cost this. The siding, the reason the siding's bowing out is because of what's behind it. And it makes sense why they did that. And they're hiding something, right?
Right.
So when I provide those notes for those agents, then they have everything. They can literally read like a script on, number 7. Yeah, this is why it's doing it. And this is the cost. And, then you've got a little bit, more confidence when you're negotiating that through.
Yeah.
So that's something I always do. But I'd say we can usually do inspection reports, obviously, from photos, but there's always that little bit of contingency where it'll kind of bite us in the butt sometimes. But for the most part, we can give you ballparks from photos, things like that. And if it's something you want to explore more, then we'll definitely go on site and just double check and confirm. I'd say most of the time we're probably 85, 90% accurate, but then there's that small flux, of things where, I didn't anticipate, like this chimney cap was a custom made chimney cap, it was a larger one,
right,
and anticipated than what I had budgeted for you. So at least if you have, that conversation up front, then there's no surprises.
Yeah. That's always just, I feel as an agent, I'm like kind of just hesitant to be like, our, sending a contractor out. Like, I don't want you to spend time driving out there and quoting it, knowing that, like, okay, half these items might get cut from the scope. So I feel like it works out in everybody's best interest to, like, just give me something that's just based on this report.
Yeah.
And that's
that's and we know that it's if you're sending me to 10 of them and nothing ever happened, that's one thing, but it's part of the business. You got to go out there and deliver quotes, and we're always happy to do things like that. And like I said, provide value. Even if you don't go with me, at least maybe I'd love to hear that you had some negotiating power because of what I helped with, and you were able to maybe make something happen that was beneficial to you and your clients. So any way we can be of assistance, we're totally down to do things like that.
Yeah, you understand the business.
I'm trying. I appreciate it.
All right, man. Well, dude, thank you for coming on and talking to us and sharing your insight. I feel like there's just been a ton of value shared in this episode. So I think we wrap up here, but thank you for coming in.
Awesome. Thanks for having me, guys. Appreciate y'all.
Anything you want to plug while you're here, Chase?
If you ever want a quote or anything like that, investorpriceservices.com. That's investorpriced, PRICED, services.com/free quote. Or just go to our website. You'll see the tabs there. Check out our Google reviews, things like that. We're on Instagram. And there's probably an agent that knows who I am. So we hope that we can all work together and make some stuff happen. So appreciate you guys having me here.
Yeah, for sure.
Yeah, thanks for coming in.
Let's do it.
If you enjoyed the episode, please leave us a 5-star review on Spotify and like the episode and subscribe to our channel on YouTube. That really helps us out.
If you think someone that you know could benefit from hearing the things that we talked about on today's episode, please share it with them.
You can check out our full library of episodes wherever you get your podcasts. And if you have any suggestions for the show, like who we should interview or a topic we should discuss, please email us at circleinvestorpod@gmail.com.
That's it for today, but join us right back here next week for another episode of the Circle Investor Podcast.